Welcome to Bold Ventures TV, brought to you by OrgPR LLC and Seyfarth Shaw LLP. Tonight, Gene Creech hosts a technology roundtable with guests Ashish Bahl, Chairman and CEO of Acculynk, and Tino Mantella, President of the Technology Association of Georgia.
All right, welcome back to the program, everyone. I'm Gene Creech, and you're listening to Bold Ventures Radio. And tonight, boy, we have a really special show for you. We have a technology roundtable going on. It's a great discussion. We've got Tino Mantella here from the Technology Association of Georgia, Ashish Bahl, who's the CEO of Acculynk. And I have to go back to something that you said, Ashish, because I wrote it down. It struck me. It struck me as so interesting. So, in our earlier conversation, you said that venture is just dead here in Atlanta. Can you kind of give us a little bit more background around that?
Sure. I think that's a great question. And so let me go back in my dates to the 2000 era. In late '99, early 2000, when there was a dot-com boom occurring, a lot of the venture folks were under the perspective that Atlanta is a great place, lots of great companies, lots of great talent. It's effectively a low cost to operate a business. So let's set up shop down here. And a lot of venture funds, through direct or indirect partnerships, showed here. And fortunately or unfortunately, they made lots of heavy dollar investments at the peak of the dot-com bubble. And before the cycle could ever work its way out, they lost the money, they were gone. So
they got burned.
They got burned in a very, very large manner. The funds that are in town are relatively small.
Today, so the funds are in town today.
The funds that are in town are relatively small. You don't have a lot of, $500 million to $1 billion funds that you see, like Oak Investment Partners or Clyde Perkins. Atlanta just does not have that for a variety of reasons. So the funds that are in town are relatively small funds. And when you make an investment, and if you have a $50 million fund, $5 million is a lot for that fund. So you want to usually invest in very small chunks, and you want to mitigate your risk. And when you have that investment strategy, you're not going to hit too many home runs. You might, but it's going to be the exception to the rule. Whereas another approach might be, if I had a $50 million fund, I'm going to make 4 early stage investments. I'm going to have 40 to 50% of the company. 2 of them might go out, but a couple of them might be worth $1 billion.
Yeah.
You don't have a lot of that happening, and as a result, the local venture guys are looking for risk mitigated deals, and there's absolutely nothing wrong with that because they don't want to lose their shirts.
Right.
But there's a lot of early stage folks that potentially have some very significant displacing technologies that might not want that investment, or if they meet the milestones that are being requested, get your first merchant, build the product, then we'll fund you and we'll give you a couple of $1 million, they're better off bootstrapping, getting a strategic and going elsewhere. And so Atlanta is effectively in a conundrum. And the final piece to the equation is a lot of people that invest in Atlanta and have liquidity events in Atlanta for a litany of reasons are in Amelia Island, they're in Ponte Vedra, and so you don't have a lot of that money going back to work looking for the breakthrough ideas. So you combine that with an infrastructure that relative to other big cities, it's not doing its part. It's a very, very hard environment. And then the final piece of the equation is that a lot of companies historically have been exiting. The big banks, or big presence here, they left.
We only have one large Atlanta-based bank.
It's SunTrust. You're knocking every day. You wake up knocking that Chase, your city's not going to buy them. But why that's relevant is if you're in Atlanta, you don't have a lot of external support. You're going to these networking events. You're going to have a very regional view of your product, and a regional view of your product is not going to create a $100 million company, which is what you need to really get discovered. So those are all of the factors, along with the lack of legislative infrastructure, that are stymieing the city. And between Urwash, Tino, myself, we're all doing our thing to help break out of that rut.
Thanks for watching Bold Ventures TV, which is the sister show to Bold Ventures Radio. Both are brought to you by OrgPR LLC and the law firm Seyfarth Shaw LLP. Each week, Gene Creech interviews interesting entrepreneurs from around the country. Every Wednesday night, you can tune into the live broadcast of Bold Ventures Radio at 16:20 a.m. or at www.americaswebradio.com. If you have a guest suggestion, send an email to gene@boldventuresprogram.com.